welcome on board the management at PSP Projects as well. Mr. Patel, the CMD and CEO, is joining us now. Mr. Patel, good afternoon. Thank you so much for making time and speaking with us. Well, the Q3 revenue was a tad bit tepid, and it seems that's why you have lowered your guidance as well. Could you talk to us about what's the revenue target now for FY23, plus what's the expectation for FY24 growth?
See, actually, our target was reduced by 100 crore because the projects which we are doing in UP, most of the projects are turnkey projects. And when you have a turnkey project, there are so many approvals. So at the stage of finishing, we are getting little bit stuck up, or the things are getting delayed in terms of getting approval on time. So based on that, our target of this quarter also get reduced by 100 crore. At the same time, we are thinking that may impact on the total revenue which we envisage at 2200 crore may get reduced to 100 crore. But yes, the order book which we have got now, it is on the surpass the projection of 2500 crore which we gave. So probably next year we will be in position to recover this 100 crore plus the 20 to 25% growth which we always say.
What would be your current bid pipeline? Can you just talk to us more about that?
See, bid pipeline is about 4,200 crore, and out of that, there are few projects which are of more than 1,000 crore. At the same time, as we have already crossed to reach to about 3,300 crore this year, and still there is an order of 345 crore L1. So probably we should be in good position to reach to near to 4,000 crore this year.
Right. In terms of your guidance and your bid pipeline, you think that FY24 revenue guidance could actually be higher, or order inflow guidance?
Yeah, probably if all the projects go smoothly, I think it should be better than what we are trying to give a guideline of 20 to 25%. It can cross 25 also. So let us hope for the best.
What's happening with the margins? Can you just tell us that with commodity prices coming down, it generally would have a lag effect as far as margins is concerned? You expect that to come in the current quarter that is going on, or probably from Q1 of next year?
It should come in the project in the Q1, because whatever the projects which we have executed largely are from UP, and that got impacted due to concrete and cement and steel rates in the time when the just after Corona. So almost 70 to 80% project was done in the period of just after Corona, when the rates were very high. And after March 22, the rates got little bit relaxed. So I think this year we may not get that benefit, but next year onward we should get that benefit.
So that's why I think you've maintained your guidance for margin between 11 to 13%, but also wanted to talk to you about the balance sheet situation. What is the gross debt expected to be by the end of the year? I understand it's around 200 crore rupees right now. And also if you can talk to us about your working capital days, how are they expected to trend from here on?
See, working capital days are little bit stretched in this quarter, but probably will be in that range of 60 to 75 days. And we are about the overall debt side. Presently, the debt is 190 crore, out of which 145 crore is short-term debt, and that is just because as we are doing MEP work with full force at UP, most of the money has been spent on the advances to be paid on the subcontracting of mechanical, electrical, and plumbing and HVAC works.
Okay, Mr. Patel, we'll let you go on that note. Thank you so much for joining us. So very positive commentary coming in. The bid pipeline at 4,200 crore rupees. They believe that they have the potential of doing a revenue growth of 30-35% in FY24, and the margin is something which will be between 11 to 13% with a bit of a reduction as far as the working capital days is concerned. So positive commentary, but given that Q3 was tepid, you're seeing that stock has been under pressure.